From the morning reading, sector funds that led out of the market bottom don't often continue. What we see most often is that the leading stocks take a back seat in the months ahead as mean reversion kicks in. The worst sectors coming out of the low didn't suddenly become the winners either, but it was more common in bear market rallies for that kind of behavior to take place. The skew index has soared to a new all-time high. This means that the S&P 500 options traders are pricing in the highest ever likelihood of a black swan event over the next 30 days. Approximately a 15% chance of a 2 standard deviation move over the next month. That probability was under 6% as recently as September 30th. The previous high in recent years occurred on September 18th, before the S&P tumbled more than 9% over the next few weeks. This is a minor indicator that was not effective prior to the past 5 years, so we'd consider it a minor warning at best. Monday was the narrowest range, high minus low, in more than a month, certainly due in part to the U.S. bond market being closed. There has been a modest negative bias following narrow range days at a multi-week high, especially when the S&P is below its 200-day average. But the edge is not as significant as one would think. With the higher high in the S&P last week, we'd still consider the short-term trend to be neutral. Hello, this is Stephen Harris, the head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:18 a.m. Central Time, and I'm recording this in preparation for the market day of October the 13th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's go ahead and dive in. Yesterday, of course, was a very narrow range day, and last night saw kind of everything kind of coming back together, and most importantly, when the cash market opens, that'll be the real kind of all participants, all hands on deck. Bonds yesterday, in effect, we're still trading through the ETF. TLT was quite active, but with respect to the actual bond futures, that was closed during the day yesterday for Columbus Day holiday. In the broad market indices last night, we have weakness, and indeed the S&P futures are down over 10 points, or about 0.5%. Russell down about 1/3%. NASDAQ down about 2/3%, and the Dow down about 0.5%. Crude oil was flat, as is the bonds, and also the euro. All three of those are essentially scratch. Gold down about 0.75%, so kind of interesting that gold would be down about 0.75%, and the broad market indices are also all down somewhere between 1/3 and 2/3%. And overseas action, China essentially marginally up, Hong Kong down about 0.5%, Japan down over 1%, as is Germany. United Kingdom a little less than 1% down. In terms of macroeconomic reports for today, not getting much. Got a couple yellow flag reports. The United States really quite quiet today. In terms of tomorrow, again a couple yellow flag reports. We do have core retail sales, PPI month over month, and retail sales. So that will be the first kind of significant action on the macroeconomic report for the United States for this week. In terms of current volatility conditions, we have a VIX that continues to be really quite low, 14.73. You have that all-time high on the skew, and we'll talk more about that in just a moment. IV percentiles all very low, really almost all in the lower 20 percentiles. 2117, 2117. That's certainly getting down there. No standard deviation moves were put in yesterday. Obviously an inside day, very, very much narrow range, as you heard from the morning reading. Let's go ahead and take a quick look at the charts. One of the things that I don't want to make too much of this action yesterday because not all players were on deck, but we continue to point out that the momentum certainly has ebbed. We see these smaller candles, indecision. While you did get a new high, it continues to kind of bump up against this area of the FOMC wick and has not actually moved through 2020 yet. That will be significant to break through 2020. Will likely, if we get through 2020, run up to 2040 in pretty quick order, and perhaps 2050 areas probably before we start to run into that next area of resistance. So really kind of bumping its head right now. Of course, weakness coming into the cash market right now with it a little over an hour to go. So we'll continue to watch for that. If we do get a retracement, expect a retracement probably of about a third. You could draw a fib retracement from here to here and then about a third of the way back. Probably back here to about the 1990, 1985 area. And you see the top of the cloud also coming in here right at the round number 2000. So this could be a fairly marginal pullback, nothing too scary is the probable hypothesis at this point. In terms of the Russell, of course, it's continued to be relatively weaker, which is not good for the bulls case, and has been also losing momentum and rolling over of late. In terms of the NASDAQ, has not yet made that FOMC wick like the SPX, also losing momentum here. And of course the Dow's been out here all on its own, already having broken through that second line of resistance, and really is bumping its head up against the former range, but also showing signs of running out of momentum with these smaller body candles. And finally, we'll look at the VIX futures. VIX futures are up a little bit this morning. And what we're really looking for is to see if this can truly break down into the kind of what we call the bull range, where you're in that 12 to 18 area and kind of playing in that area, as opposed to this kind of 20 and above area, which is more of a bear market range. So so far it's looking more like it's going to play in the bull market range, but obviously we'll see what happens with this next pullback, when and if that should come. And then once it does come, obviously at some point we'll get a pullback. You know, where does it spike to and how fast does it come back down? Remember, in bull markets you usually get a VIX spike and then a quick fall back. Whereas in bear markets, you get a spike and then a much, much slower kind of consolidation and giving it back up kind of thing. The market makers are much less likely to want to let that volatility edge off when they think that there's a lot of risk in the market. And that's reflected, of course, by people buying puts as well. That's all integrated into there. Okay, let's see. Let's go to our regular daily report. Some changes here today. We've had the IBD status confirmed uptrend, but we also had the GMI index flip to a buy signal with yesterday's action. It's now a 4 out of 6 with the buy signal since 10-12. Notice that the accumulation distribution in the S&P is a B- still. So that's relatively healthy, but the NASDAQ is still at an E. So there's still flies in the ointment, as it were, to appear here. This is not all bull all the time by any measure, but we continue to see slowly but surely more signs of these mechanical signals in this upper part turning bullish. So two of the important signs have gone bullish. In terms of decision points, we're still left with short-term buy signals across all the indices, but in terms of intermediate and long-term, it's still mostly down arrows and bearish. Intermediate-term market posture very bullish, and D you look at this, I mean, this is actually getting to be pretty high readings. S&P 89.2, the Dow 96.4, but then concerns around the NASDAQ and Russell. Bullish readings, but relatively weaker bulls than compared to the S&P and the Dow at 69.5 and 66.9. We'd like to see them be the leaders of the pack for the bulls. You've still got to say, though, that this intermediate term market posture being very bullish is very good standing, and it could stay up here in this area above an 80 for extended periods of time. So we're certainly not expecting a lot of bearishness to come back with any kind of retracement at this point. Notice also the position sizing opinion, slight change here. On the volatility-based metric, with that VIX dropping below an 18, this now goes to a full-size position sizing opinion to match that of the investor position sizing opinion. In terms of hedge warning status, we're still at a level 1. You could make some arguments to lower this to a 0 plus. Primary reason I'm not doing that at this time is being influenced by this expectation that we're up against resistance, that this falling momentum, and that we're going to be kind of set up for a pullback, though I'm expecting a minor pullback. Now the skew is the other really significant kind of fly in the ointment. Now you heard from the morning reading that this is considered a minor indicator, and indeed you notice it's down here, one of many of the volatility based indicators. It is not up here with the same kind of importance as IBD status or GMI index, but still, when you put in an all-time high reading and you have a 14.45% probability of a 2 standard deviation move expectation in the intermediate term, that's quite a bit different than literally 2 weeks ago. This would have been like 1/7 of this probability. So there's an awful lot of hedging going on by participants in the market, and usually there's a reason for that. Now of course you could always argue that the market tends to hurt people in the worst way, but still these aren't just little consumer retail traders that are buying these kinds of volume. These are institutions that are buying this kind of hedging volume. So I have to kind of believe that we're going to get that pullback, and it may be as early as even today. New highs, new lows. That was very strong yesterday. Again, one for the bulls here, 451 on the new highs versus only 19 on the new lows. Also, the intermarket risk aversion indicators also continues to improve. We are now at 3 out of 5 as risk on. So there's really not a lot of signs of weakness here. You have this poor NASDAQ reading. You have the intermediate and long-term down arrows from the stock charts decision point system. You have this skew rating, and you have 2 of the 5 intermarket risk aversion indicators flagging as risk off. So certainly this is the healthiest we've seen these metrics in several weeks. So kind of keep that all in balance. In terms of special opinions, option income strategies, VIX is now, for the first time again within weeks, within the acceptable window to initiate new option income strategies for novice traders. You might want to consider reduced position size and the potential for higher than normal delta and vega moves given that current skew rating. But other than that, this is pretty much as clean as it gets. Cover call strategies, conditions cautiously bullish, acceptable to initiate new positions for novice traders. Consider 1-to-1 ratio of in the money and out of the money strikes. Also a 1-to-1 ratio of higher beta and lower beta positions. By doing this, you'll be relatively defensive, and that continues to be probably a good opinion at this point until we start to establish ourselves as a stronger bullish stance. We are not an all-out, all-bull stance where we would be more high beta and more out-of-the-money strikes on covered calls. You want a little bit of defensiveness while still initiating bullish positions. Consider reduced position size, legging into covered calls through out-of-the-money puts. Always keep that position size in the scale that you are willing to own. And that, of course, applies to the put selling. And with the put selling, you might also want to consider scaling in and using defined risk positions by using bull put spreads. In terms of sector specific, not much change from yesterday. Pretty much all green all the time on the short term and intermediate term. This continues to get healthier. In terms of percent change, of course, yesterday was kind of an inside range day, so not anything particularly exciting on up or downside here. Not too much to be made out of yesterday's action. So, as always, I think that's probably enough for today. As always, if you found this helpful to your trading, show that appreciation by retweeting us to your Twitter followers, to your StockTwit followers. Like us on YouTube, subscribe to us on the YouTube channel. All those things are ways to show your appreciation. Give us a pat on the back for doing this service each morning in our YouTube market preview. More information is available about how we actually put these principles into action at this website. Free trials are available. Disclaimers as always, hit the pause button if you need more time to review this. And we'll see you back here tomorrow morning before the market open with the Falcon Global Market Preview. Good trading.